The next step in the process is when you're buying a home and have your offer accepted. You are now under contract and you have a closing date, so the clock starts ticking. This is when you'll most appreciate what was done previously in our process because it ensures a smooth experience from now through closing. The next step in the process is locking your interest rate. And the only time interest rates really matter during the entire mortgage process is now, because now is when it's time to consider locking in the rate. The truth is, it really doesn't matter where interest rates are when you're getting qualified, because it only matters where they are when it's time to actually lock. Interest rates can move up and down rapidly and can even change from hour to hour during the course of a day. This is why it can be so difficult to accurately compare interest rates from lender to lender, because getting a quote from one today and another tomorrow, well, it's no different than driving by a gas station looking at gas prices when your tank is full. It only matters to you where gas prices are once you need to fill up. Locking your interest rate means that the interest rate is guaranteed as long as you close prior to the expiration of the lock. So even if interest rates rise during this time, you are protected from rising rates. Now, the next stage of the process, which typically takes place at this point, is disclosure of your loan. How and when this disclosure takes place is regulated by federal law. You can access your disclosure package by a link that your loan officer will email, and you have the ability to e-sign loan documents, so this part of the process is quick and easy. If you prefer to have the documents printed and to physically sign them, just let your loan officer know. Your loan estimate, which will detail all of the costs and fees associated with the loan, will be included in this package along with all other state and federally required forms. Please note that this is a preliminary disclosure package, so it is possible for things to change should you choose to change your loan amount or loan programs, for example. The next phase of the overall process is the processing stage of your loan. This is the stage where everything on the application is validated in advance of sending your loan to the underwriter. Things like bank balances can change from the time you applied, so this is where updates are done. Employment is also verified during this stage, and a number of fraud prevention steps are also completed during the processing stage. If any supplements to your credit are needed, they are also completed during this phase. Other items that take place during the processing stage relate to title work, insurance documentation, and any letters of explanation that may help explain situations or scenarios to the underwriter. The appraisal is typically also ordered during this stage. Now, the appraisal is another crucial stage in the overall mortgage process. The appraisal may determine if a loan can even be done on a property. While you may be completely qualified as a borrower, if the collateral is not in condition meeting loan requirements, or if there is an issue with the value of the property, it may impact the ability to secure a mortgage on it. Sometimes an appraiser may also require work to be completed in order to make the property eligible for financing. The underwriting stage is the next stage of the mortgage loan process. Your loan may be submitted to underwriting prior to the appraisal being completed so that any credit or other conditions the underwriter has can be addressed and to reduce the risk of any closing delay. The underwriter will review the complete file and the previously run automated underwriting findings to ensure that all requirements are met, allowing the loan to eventually be sold into the secondary mortgage market. It is very common for the underwriter to issue conditions. Maybe an updated pay stub is required, an additional comparable sale added to the appraisal, or an explanation regarding a non-recurring deposit into a bank account. These are just a few examples of commonly required conditions. The final stages in the overall process are the closing and funding stage. Once any underwriting conditions have been cleared, your loan is moved to the closing department. The closing department will prepare your final closing documents and will send them to the settlement agent where your loan closing actually takes place. A minimum of 3 days prior to the closing, you will be issued a preliminary closing disclosure, which will allow you to review all fees and to make comparisons to your initial loan estimate. The last stage in the process for you is the actual loan closing. This is where you will review and sign your loan documents. Once your closing has been completed, your settlement agent will upload documents which are reviewed by PrimeLending's funding department. A funder will review the documents to ensure they are signed and dated properly, and once confirmed, a funding authorization is given to the settlement agent. Congratulations! You are now a homeowner or have successfully refinanced your home.